Welcome back to the Longacres Finance channel. With only a few days left of March, it's time to take a look at the best Dividend Aristocrats for the month of April. Dividend Aristocrats are not off to a good start this year. NOBL, the Dividend Aristocrat ETF, lost 4.08% in January and 2.59% in February, giving the fund its second worst start to the year since inception in late 2013. March is shaping up to be a more positive month, with the fund gaining 4.25% through March 25th, inclusive of the already declared dividend that will be paid at the end of the month. As of right now, there are 65 companies in the elite Dividend Aristocrat list. 26 of them are performing better than NOBL through month-end February, and 18 of them have a positive return during this period of time. Oftentimes, we are told that picking individual stocks or trying to time the market is a losing game for the average investor. While I believe in general this is true, I also believe that there are simple strategies dividend investors can follow to achieve better than average results. I came up with two simple strategies for selecting the best Dividend Aristocrats each month, and a third strategy that blends them both together. In theory, these strategies make sense and should lead to alpha over a longer period of time. I have tracked each strategy since August of 2021, and all three of them have performed better than NOBL during this period of time. Join me to find out how each strategy works, how well they have performed, and which aristocrats are chosen for April. The first strategy is a pure valuation play, where I select the 10 potentially most undervalued dividend aristocrats for inclusion in the portfolio. Valuation is measured by dividend yield theory, that works on the simple premise that dividend yields revert back to historical averages over long periods of time. So if the current dividend yield for a given aristocrat is higher than its trailing dividend yield, it suggests the stock is trading at a discount. If the dividend yield reverts back to its historical average in the future, investors can benefit from the resulting capital appreciation, while also initiating a position in the stock while it offers an above-average dividend yield. This strategy is definitely a long-term strategy, since here we are targeting out-of-favor stocks which can result in short-term underperformance. This is exactly how the strategy started out, losing to NOBL during the first 3 months. However, this initial underperformance was followed by 3 months of outperformance, as some of the out-of-favor stocks have since rebounded. The most undervalued strategy did not perform well in February, losing 3.98%, compared to a loss of 2.59% for NOBL. But since August of 2021, this strategy is beating NOBL by 5.98%. March is not shaping out to be a good month. Through March 25th, the 10 chosen aristocrats are up 2.09% versus 4.25% for NOBL. The best performing stocks in March are Atmos Energy and IBM, both with a gain of 8.55%. The drivers of underperformance are Franklin Resources and Clorox, both with a loss of about 6.4%. There are still a few trading days left in the month, so the final results will likely change, but it's doubtful the selections for March are going to beat NOBL. However, as I mentioned before, the real benefit from this strategy is earned months or years in the future. I'm not concerned if the selected stocks underperform the benchmark in the current month, because after all, they are out-of-favor stocks that are discounted by the market for one reason or another. So a much more useful measure for this strategy, and actually all three strategies, is how they would perform under a buy-and-hold investing approach. A buy-and-hold investing approach is the optimal strategy for dividend investors. It's easy to implement and very tax-efficient. You simply buy the chosen stocks in the given month and never sell your position. The following month, you buy the chosen stocks for that month, and repeat this process over and over. The buy-and-hold portfolio for the most undervalued strategy is beating NOBL by 8.5% since August of 2021, which is 2.52% better than the individual monthly selections are performing. The benefit here comes from positions that were purchased in the past when they were undervalued, that drive the portfolio return as their valuations recover. This strategy initiated positions in Chevron, Exxon, and General Dynamics in August and September of last year. These positions are amongst the best performing aristocrats this year. The strategy also added shares of AbbVie in October of 2021 that has performed very well since. The buy-and-hold portfolio holds 21 unique dividend aristocrats and is down just 0.92% in 2022 versus a loss of 6.56% for NOBL. The total return since August of 2021 is 8.04% for the portfolio, while NOBL is down 0.46% during this period of time. There will certainly be losing months on the horizon for this strategy, but I believe in the long run it'll generate alpha over NOBL and lead to above average returns. Let's take a look at the most undervalued aristocrats right now that will be added to this portfolio in April. The 10 chosen stocks are Franklin Resources, Clorox, Ecolab, Kimberly-Clark, 3M, PPG Industries, Stanley Black & Decker, T. Rowe Price Group, VF Corporation, and Walgreens. 3 of these aristocrats, Kimberly-Clark, PPG Industries, and Stanley Black & Decker, are new to the portfolio and will expand the number of unique holdings from 21 to 24. The average dividend yield for the chosen aristocrats is 3.12%. That is much higher than the average dividend yield for all 65 aristocrats right now of 2.23%. Okay, moving on to strategy number 2, which are the dividend aristocrats that are expected to grow the fastest. Here, instead of focusing on valuation, I am more interested where each of the individual aristocrats is headed in the near future. To measure this, I compute an expected rate of return and select the 10 aristocrats with the highest forecast. The rate of return is computed by taking the forecasted 5-year earnings per share growth rate, combining this with the current dividend yield and a return to fair valuation. The return to fair valuation is based on dividend yield theory and a 5-year time frame for the stock to revert back to its trailing dividend yield. This can either boost the expected return if a given stock is potentially undervalued, or lower the return forecast for overvalued stocks. This strategy got off to the best start, beating NOBL for the first 3 months. Then it cooled off a little and currently is the worst performing strategy. However, it offered the best return in February, losing only 1.82% versus a 2.59% loss for NOBL. Since August of 2021, this strategy is 5.37% ahead of NOBL, and it's not too far behind the other strategies. I believe the strategy has merit, and investing in aristocrats that are poised to offer above average returns will be a winning long-term approach. The buy and hold approach to this strategy includes 16 unique aristocrats, so it's a more concentrated portfolio compared to the most undervalued strategy. The buy and hold portfolio also performed very well in February, with a loss of just 1.41%. Since August of 2021, the buy and hold portfolio is 5.64% ahead of NOBL. March is thus far shaping up to be a very good month for this strategy. The chosen stocks are up 5.46%, or 1.22% more than NOBL through March 25th, which should only extend the alpha generated since inception. The main drivers of alpha are Caterpillar and Nucor, that are both up over 19% this month. Let's take a look at the chosen aristocrats for April. We have Chubb, Ecolab, IBM, 3M, Nucor, PPG Industries, Stanley Black & Decker, Cisco, T. Rowe Price Group, and VF Corporation. So with no new additions this month, the buy and hold portfolio will remain unchanged from its current 16 positions. The average dividend yield offered by the April selections is 2.59%, which is better than the average yield for all dividend aristocrats, but lower than the most undervalued strategy. And finally, we have the blended strategy, that is a mixture of the first 2 strategies. Here I look for the fastest expected growth rates, but only amongst the potentially undervalued aristocrats. The aim is to blend the best combination of valuation and expected growth. The blended strategy has never posted the best monthly return since I have started tracking these strategies, but it has been the most consistent and is currently the best performing strategy. The strategy is 6.18% ahead of NOBL since inception, which places it 0.2% ahead of the most undervalued strategy, and 0.81% ahead of the fastest expected growth strategy. March is not looking so good for the chosen aristocrats in this approach. Collectively, they are up 2.53% versus a gain of 4.25% for NOBL. So after March, the blended strategy will likely concede its lead back to the fastest expected growth strategy, barring any major stock moves in the last week of March. The strongest performers in March are Cintas with a gain of more than 10% and IBM with a gain of 8.55%. The driver of underperformance is Stanley Black & Decker with a loss of 14.5%. The buy and hold portfolio for the blended strategy holds 23 unique positions, and it has performed nearly 2% better than the individual multi-selections. Since inception, the buy and hold portfolio is 7.99% ahead of NOBL, which places it as the second best buy and hold portfolio. Let's take a look at the 10 chosen aristocrats for this strategy for April. We have Ecolab, IBM, Kimberly-Clark, Medtronic, 3M, PPG Industries, Sherwin-Williams, Stanley Black & Decker, T. Rowe Price Group, and VF Corporation. So we have 3 new additions to the portfolio coming in April: Kimberly-Clark, PPG Industries, and Sherwin-Williams. This will expand the buy and hold portfolio to 26 unique aristocrats going forward. The average dividend yield for the 10 April selections is 2.78%, which places it right in between the first 2 strategies. I know thus far I only have 7 months of data, and that is quite a short period of time to test any strategy. But these strategies are based on simple principles, and in theory they each make sense. I believe they will continue to deliver long-term alpha over NOBL. Since this video is not investment advice, I'm not recommending any of these strategies or stocks to anyone, but feel free to borrow what you like. If you enjoyed the video, please give it a like and subscribe to the channel. Thank you for watching and see you next time.